from the Sky News Centre at 11. The unemployment rate has dropped again to 7.1%.
Not all that long ago, the route to economic recovery was pretty simple. The Bank of England had it all mapped out. The unemployment rate would drop to 7%, though not for a few years. Then, and only then, would it consider lifting interest rates. But the jobless rate has fallen far faster than expected, now down to 7.1%, the lowest level for 5 years.
We've had further good news both on borrowing and also on jobs, and we've seen the biggest increase in employment in Britain's history. That's great news because every one of those jobs is a family more secure, and it's evidence that our long-term economic plan is working, and security and economic prosperity for all is the purpose of that plan.
However, the squeeze on household incomes is still continuing. Earnings rose by just 0.9% in the year to November. Compare that to inflation, the cost of living, which is rising by 2%, more than double that rate. And the fall in the jobless rate leaves Mark Carney, the bank's governor, at a crossroads. Does he stick with the original plan, keeping interest rates tied to unemployment, maybe moving down the threshold to 6.5%? Or does he take another route? And there was a clue in the minutes to their latest meeting, also released this morning. They say that even if unemployment does get down to 7%, there is no immediate need to raise borrowing costs. But experts think the increase could happen sooner than many expect.
Bank of England hasn't wanted to raise rates for quite some time, and we still think that rates probably won't rise until the middle of 2015. But the discussions contained in the minutes do suggest that there is perhaps a slightly greater risk of an interest rate hike coming before the end of the year, particularly if the recovery turns out to be stronger than expected.
For many families, such as this couple in Redditch, Worcestershire, the impact of those prospective rate hikes is clear.
We have heard that there's promises of not increasing interest rates for another 2 years or something like that, but really we could do them going down, not staying the same. It's still, if they went off, it'd just cripple us.
Still, for savers, anything higher than today's 0.5% would be a welcome relief. And for the UK, it's another sign that the red light of recession is giving way to the green light of recovery.